Hey guys, good evening. It's BA here. It is Friday evening, December 23rd, on the eve of Christmas Eve. So I just want to give you the Friday recap. Just real quickly, I wanted to run through and just merely show you how the levels played out this week. So what we're going to be looking at is, hey, where'd my mouse go? Oh, it's over on the other screen. There we go. The Friday recap and the insanity of it all. Yes, this market. Well, let's get to the charts. I'll just show you what I'm talking about here. All right, first up is the S&P. Hey guys, you know this is it didn't move this week. It didn't move last week. We are stuck in a range for the last 2 weeks that rank as one of the tightest 2-week ranges in the history since uh, yeah, since the sentiment guys have been collecting data on this thing. And I want you to contrast against last December. I want to show you how quickly, how this market moves from one extreme to the other. It does not know normal market movement. It's completely thrown normal market movement out the window. I was talking to Drew the other night, and I mentioned that there's a whole generation of traders that have started trading and investing that have no idea what a normal market looks like. They're accustomed to this market, that once the buyers step in, there's never a down move. It runs 3 months straight up. Nobody has to worry about anything. It blips down for less than a day, and it rips back up to all-time highs again. That's what they're accustomed to. Nobody's accustomed to a market where you had no idea what it was going to do in the overnight session. You had no idea if this thing was going to open up plus 10 in the morning or down 14. That's the way that old S&P used to operate. Gaps everywhere. The only gaps we see now are gaps to the upside. Guys, this is not, uh, I've said it for years, this is not a normal market. It's so aberrational right now. It's just unbelievable. And we go from one extreme to the next. There's no middle ground in it whatsoever. I mean, we've only moved less than 1% in 2 weeks in the S&P. That's unheard of. It's just simply unheard of. That's why there's such a low IV ranking in this thing. I mean, it's 9% in the weeklies on this in the futures markets. It's just utterly ridiculous. If we were in a normal market right now, uh, yeah, I would probably have loans against short positions in this thing because you'd never see this kind of behavior in a normal market. Traders wouldn't allow it, but now it's just completely a different group, a different crew. I don't know what it is. I've got my speculations and my theories about it, but hey, anyway, we're just keeping track of our ranges, and no matter what happens, the ranges are going to hold true to form. You know, as this IV environment explodes, and if it ever does and gets bigger, then our ranges will expand out as well. But you can't sell anything in the S&P right now. If you want to do a strangle in the weeklies, you got to put a 5-point strangle on this thing to even collect any theta on it. You know, 5 off of the at the monies at the beginning of the week. So it doesn't pay to play anything like that right there. So it's a time period just to step aside in the S&P. Yeah, we'll miss about 3 weeks or so of trading our strangles, but it'll be worth it. It'll be worth that pain on that first 50-point down move in the S&Ps. It just completely scares everybody. But again, don't blink because the next day it'll be 75 higher. Anyway, S&Ps right in the middle of the range, as abnormal as they get. And the VIX right now, guys, while we're on the S&Ps, I got to check and see. I don't know if I got filled on my VIX, on my UVXY trade or not today. Um, you know, the VIX is at a level that it always spikes from. So we're down into once again, historic lows in the VIX. Not absolute lows, but historic lows. And it's in the area where it can just rip higher from. It doesn't mean the stock market has to crash. It just means we go down a little bit. We get 20 up in the VIX. Yeah, we got to take action because in this environment, it's just not going to last very long. Um, One of the things we're looking at that I have to factor in is we're at all-time highs. We're at the end of the year, and this is a time when fund managers, hedge fund managers, they get paid for their performance. So it is in their best interest to keep this market into the highs going into the end of the year. If they do anything, they'll sell it off at the end of the very last trading day, if they do anything at all. But what a contrast between last December and this December. Last December was the most volatile December since 28. I think it's one of the two or one of the three most volatile Decembers since 1928. Yeah, it's one of the two because the most volatile was in 2007. So, and now we go to the most docile market that Sentiment Trader has any information on. I'm just spewing out these data points, guys, just to let you know that there is nothing normal about what we're seeing here at all in this market. And everybody, all these analysts, they can kick back and say, yeah, it's market's acting the way it's supposed to. Yeah, you know what? I will agree with them. It's acting the way it normally does prior to an unraveling. So we still got, believe me, we still got a lot more to the upside. I don't think we get any more. It would really surprise me to get a lot of upside action from this point right here. I tend to think it's blown its brains out, and it needs to come back down before it goes higher, and I mean a lot higher from here. We're in that setup mode where the insanity will be rampant. Hey guys, that's why I'm picking up all these penny stocks, because when the insanity runs rampant, they will be coming for everything. And if I can scoop up 50,000 shares of maybe 10 or 15 different penny stocks, hey, it's like lottery tickets. That's how I'm looking at these things. So they're like long-term option plays. But they'll come for them. So they'll come for the dogs. They'll come for everything when this market starts just going through the paces. Don't be fooled by Trump fixing everything. Don't be lulled into the fact that it appears that he's going to have a handle. He could probably fix a lot of things, but don't get sucked in to the herd mentality. And it will be thick when this market starts racing 150, 300 points higher from here in the S&Ps. It will be rampant. Everybody will be claiming this is different this time. This market will keep going forever. Trump's fixing everything. Hey guys, that will be about the time that the house of cards start falling. It always does. It always will. They've got to unravel this mess that the Fed and the Treasury have created. So you see how the bond market's reacted. It came off of the highs when everybody was buying bonds. Everybody thought bond prices were going higher. Bond prices turned on a dime and never looked back. Hey, there will come a time when the stock market does the same thing, but we're not there yet. The insanity is it's starting to get a lot warm. All you have to do is listen to the media right now. Everybody is bullish the stock market at historic levels. Sentiment Trader did this study the other night. They have never seen a time when every fund manager, hedge fund manager, private investment firm are so bullish on the stock market. Everybody expects higher prices. That's usually bad for the short term. Long term, I'm in agreement with them, but short term, that usually spells trouble. That's why I've got a lot of short trades. I'm short Delta Airlines. It's really starting to look favorable right now. I'm short. Let's see. I've got some short trades queued up in the S&P. I'm not shorting futures right here because it's just it's been a losing game, guys. I mean, it's been a losing game this year to fight the shorts in a market that never ever goes down. So anyway, I know there's a long spill on the S&Ps, just some of my thoughts. Let me see what we got going on here that just, okay. All right, let's take a look at the bond market. All right, guys, bond market creeped up. I don't really like this as a bullish chart right here. It looks more like it's about ready to fall off the ledge again and go back lower. I'm long treasury bonds, short treasury notes. That trade won't really, even though it's a pairs trade, and you might say it might not flush out. I mean, what's the advantage in that? It's really skewed. Um, it's one treasury bond against two notes. It really should be more of a 3 notes to 2 treasury bond. That should be the ratio. So if we start ripping higher in the bonds, this pairs trade will work out nicely. If we collapse, it won't work out at all. It'll work out very, very badly for me. So that's kind of the way this trade is structured right here. But anyway, I'm long treasury bonds. I'm short treasury notes. 1 to 2 is the ratio. And our levels held this week. All right, crude oil. Crude went absolutely nowhere this week. I think this is the first week. I have to look at my stats. I didn't really do those, guys. Not yet. I'll do those this weekend. I just want to talk to you about the markets. But crude went nowhere this week, and I have some calls queued up. I queued them up this morning. I think the 55 calls. I queued them up to sell them at somewhere around 90 cents or $1. You know, if we have a rally. So all the hedgers are big time short the crude market. So it never ever just sells off on a dime. You know, once those guys get short, it usually meanders around, usually tests the highs again. So that's what I anticipate. You know, some higher prices before it falls. Those guys are typically right. I want to trade on their side. I don't even have to ask any questions. I've seen their positions unfold far too many times to know that they get paid more times than not. And you know, honestly, guys, I have to agree. You know, there couldn't have been any more bullish news come out in this crude market, and it has gone nowhere since Sunday, since that news came out. So it's just been up here in this little island all by itself. Can't get higher, can't get lower. But I can't imagine any more bullish news in the crude market than what came out Sunday night a week ago, and it's really gone nowhere. So yeah, I'm short crude. Not going to do any strangles until we get back. You know, maybe if we get back down into this range right here, I will definitely start looking at a crude strangle. Dollar had a little bit of a reprieve today in the dollar. This morning I sold $2 two futures contracts and bought one gold contract as a pair trade. So again, this trade will work out if my thesis is right, which is we see the dollar pull back a little bit, see gold rally just a smidge. I don't think anything's going to happen until we see some weakness in the stock market. But anyway, that was a trade I put on today. Hey guys, with all the little bit of jostling around the dollar and the gold trade did today, I think it stayed in about a $10 range all day in the pairs trade. So so anyway, that's my trade there. So I will profit if the gold rises and dollar falls, or you know, if dollar hangs tough and gold rises, or if gold hangs tough and the dollar falls. So that's how I'll make money in this pairs trade. And the opposite is true. There's like 3 ways to make money. There's like 300 ways to lose money. So that's the way it always is. Okay, so here's the gold chart, and you know, it's on a shelf right now. Yes, it's on a shelf. The range is held for the week, but excuse me, guys. Sitting here looking at this. there are your gold's been down 6. If it closed down this week, 1, 2, 3, 4, 5. Yeah, I think this is 7 weeks in a row that gold has been down. That's got to rank. I know last week was 6 weeks, and according to Sentiment Trader, that was maybe it's gone down 6 weeks like this, a handful of times or less. Every time it was down 6 weeks, I think 2 weeks into the future it was higher every time. 2 to 4 weeks, something along those lines. So it's worth a probe right here to see if gold catches a bid. Yeah, we'll see. All right, that's that. Now what I want to do is I want to show you. There we go. All right, here is the Delta Airlines short. I'll just flip through a couple of charts. I really like this. We finally got some weakness. We closed underneath these resistance levels right here. These are some moving resistance levels. They act like moving averages. They look like moving averages, but they're really not. I'm using this band here. I've been testing this for several weeks before I actually added it. I tried to do some data mining on it. I've used it very successfully at nighttime trading. It really clears things up for me. It's a good visual reference point. And so I like it on the dailies too. So I have all of my top and bottom picking tools down here on the bottom. So I really like the setup. I like how we were in bubble area right up through here. We started making lower highs. We're coming out of the standard deviation areas. We're drifting down, drifting back through the channels. We cut through resistance levels. I like this. Like it a lot. So it's a good possibility that we could see definitely some lower prices from this right here. So we'll see. I'm positioned for a short trade. We'll see how this works out. Don't know if any of you guys got in with me on the penny stock AJBI. AJBI. So that was if you did, I think I only got off a little over close to 17,000 shares. But if you got in and you're playing for, depending on how much you got in for, you're already at over a double. So with just a couple of days. Hey, listen, guys, I'm playing these for lottery tickets. So it's easy. I think it's easy in most of these to double your money if you're getting them for a penny. It only takes a move up, and they'll usually drift through, go to like 2.5, 2.8 if they're just meandering around. They'll shoot up if they've got any money behind them at all. So I'm just taking shots at these things. But anyway, it's AJBI. I still have an order in there to buy 34,000, I think, or 33,000. Oh, excuse me, guys. If we get back down to a penny again. So let's see what else I need to show you. Yeah, I think I got all in on this one. Yeah, I did. I wanted to pick up 5,000 shares. I don't like this chart now. Hold on just a second. I'll be right back. All right, sorry about that. I'm back. Yeah, I don't really like the chart right now. So I've got my trades in. I'll see how this one plays out. So if it drifts lower, I might load up on this one right here down at a penny. I'll put my normal trade in about 50,000. Shoot in an order for about 50,000 shares at a penny. But yeah, I don't really like the way she's drifting down right now. It doesn't look like it's holding any ground. That's not the kind of chart I like to see. So yeah, so we'll just keep our eye on this one right here. Let's see what else we need to take a look at. This is a gold stock. I'd like to get 25,000 of these at around 2 cents if I could. Let's go look at a weekly chart. See, we've missed the trade. If you guys will notice how these things are floored at around less than a penny, and then they shoot up, and then they're consolidating in this area right here. It's just like Galifina, right in this area. I've got an order in just in case it pulls back. Hey, sometimes guys, these little penny stocks, I've noticed, they'll pull back sharply in the day and then they just rally strongly. Galifina did that every day for like 7 straight days. If you just waited for that thing to pull back 3 cents, shot in order to buy like 50,000 shares, man, you could have mopped up in 7 days because that thing went, it would double in value at the end of the day. So that's a good little ploy to look, and that seems to be a tactic that these little penny stocks. At least you have clothes on.
Whoops, sorry.
Yeah. So anyway, but I'm trying to just build up a nice little portfolio in these penny stocks. Hey, Carl said he'd be right over.
Okay.
Let's see here. What else do we have? Oh yeah, this is a little gold stock right here. So there's a yeah.
Merry Christmas. Wait, there we go.
Yeah, this is a little gold stock right here. I picked this up from a group of guys that I have a lot of respect for that run trading advisory. They're first class guys, honest brokers. They do a good job. They do day trading in the S&P or the commodities markets. So he sent out this little gold report on because they're bullish gold long term. They tend to think that China's going to pull something under the radar, surprise everybody that they've got enough gold reserves to back their currency, and they seem to think that that's going to be the ploy. So if that would ever happen right there, geez guys, I mean, that would crush the dollar. That would send gold to the moon. That would completely undermine the sham that we have going in the United States. It would derail the U.S. dollar's reserve currency status. It would just completely create havoc. It would quite possibly change the standard of living in the U.S. in the blink of an eye. Now, will Trump allow anything like that to happen? I don't think he would. I think he's the right kind of guy in the position. I think the good Lord put him in a position to probably save this country right here, because I think we're in the throes of facing some things that we've never seen before in history when it comes to the economic survival and the continued growth. So, but anyway, these guys seem to think that China is hoarding gold, quietly amassing the gold as much as they can. So who knows? I have no idea. Anyway, they like this stock right here. I could really care less. I just want to buy some at 2 cents a share. I don't care if these guys are gold miners or if they make plastic widgets that hold whatever together. So it really doesn't matter to me. Anyway, that's the story behind this trade right here. If you like that kind of thing, if you think that theory holds water, then hey, buy you some. It's still only 5 cents a share. I mean, whatever. But I'm just leaving it in there just in case we get a swoosh down one day. It goes down to 2 cents. Maybe I can pick up 25,000. If it gets down to a penny, I'll put an order to buy 100,000. Guys, I really hate. I missed this trade. I put the order in to buy it the day after this down day right here. we were down. I put the order in, and it just has ran up every day. This is I've been trying to get in this one 3 weeks. Yeah, almost 3 weeks now. So it's gone from 180, 182 up to 213. So I've just been chasing it. I'm not going to chase it. I'm not going to get go for the price that they're looking for right now. I'll just wait to see if we get a pullback. But you guys know how Tesla acts when it takes off. I think Tesla could be one of those stocks that we play whenever the insanity ramps up. Tesla catches on fire, and like it has, oh my gosh. This is the stock right here that John Carter, if you want to hear the story, just go and Google it. Google John Carter. But back here in first part of the year, Carter starts every year with $180,000, and he just trades it like a madman to see what he can do with it, in front of his clientele. He bought a lot of calls in Tesla in this area right here. He ran his little $180,000 stake up into over $1 million in this run-up, or first part of the year. So, yeah, you can Google it. John Carter, $1 million trade. I'm sure you'll pull it up. All right. Yeah, I hate I missed that one, guys. Let's see. Did I get into UVXY today? Man, I don't see it. I didn't get into it. Where is it? Nope, I didn't get in. Let's open up the, see what the order. I've got a lot of orders in, guys, to buy stuff. Holy cracky, man. They wouldn't come off of a penny, huh? I moved my trade. I tried to get a 10 lot off. I was buying the 11 calls, selling the 14s, trying to do a 10 lot, and it's trading at 31 cents. I had it in at 30, so it must be a pretty tight market if they're not giving that much on it. So let's see if we got anything else of interest in here. Financials. Yeah, this is a weekly chart. I've been looking at weeklies, guys. Yeah, financials aren't giving up anything. I mean, these things are just, and I hate I missed that. We talked about that 2 years ago. Yeah, this past January had me in a bad way. I wasn't thinking clearly. That was our time. We talked about the financials, and we knew what was going to happen. It's clear as day. It always is on the interest rate raises. The financials scream higher. We knew that was going to happen. I just flat out missed it. Missed the whole shooting match. Oh well. All right, guys. I don't think I have anything else that we need to talk about. So anyway, hey, I'll put the rest of my stuff together, get that out to you. Over the weekend, maybe Christmas Day or Monday. But hey, I really wish all you guys Merry Christmas. Hope you spend some good quality time with the family. And we will meet Tuesday night. I want to meet in order to just kind of talk through next year. Kind of what I see, what you guys think, so we can map out some strategies. You already see what I'm trying to do. You see what I'm anticipating. We'll just talk about it more. Try to get set up, because the first 2 weeks of January I'm going to be out of pocket. I'm not going to be gone, but I'm going to be out at away from this area, and won't be able to make it back in for any of the meetings on Tuesday night. So would like to meet next week, next Tuesday. And anyway, have a Merry Christmas and Happy New Year. Well, I'll see you before the New Year, but maybe some of you guys will celebrate New Year before it actually gets here too. So anyway, talk to you guys later. This is BA signing out.